Welcome back to your daily bond health report. Today is December 12th, 2025, day 6, and folks, this is the day the whole story changes. After a pretty tough week, we finally got some serious positive momentum to break down, so let's get right into it.
Okay, but before we dive in, you know the drill, and it's important. This breakdown is for educational purposes only. It is not financial advice. The world of DeFi is risky, so please always do your own research.
This right here is the number that defines the day, a positive 5.11%. You know, after 5 straight days in the red, this one figure is a massive turning point for the bond ratio, and it really sets the stage for everything else we're about to cover.
Yep, that's right. This is our very first green days since we started tracking this. The downward trend has officially been broken, and the recovery was, well, it was decisive.
Now, what's so wild here is just the sheer scale of this bounce back. So the ratio fell about 6% over those first 5 days. Well, in just this one day, pretty much that entire loss has been wiped out. Over the whole 6-day period, the net decline is now just a tiny 1.2%. That is one heck of a rebound.
So, the big question is, what caused this? It all comes down to relative strength. The fund's altcoins actually did better than Ethereum today. In fact, ETH itself dropped by 3%. The assets inside the fund just held their ground much better, and that's what drove the ratio straight up.
This slide really just boils it all down, doesn't it? When the fund's altcoins beat ETH, our ratio goes up. When ETH beats the alts, the ratio goes down. Today was just a picture-perfect example of that first scenario, and it really shows the underlying strength of the assets in the fund.
Now, seeing this signal of strength, the team didn't just kick back and watch. No, they took action. This is where we see that treasury management strategy we've been keeping an eye on all week really spring to life.
So for 5 straight days, the name of the game was patience. As the market was showing weakness, the team was accumulating liquidity, growing their deployable cash pile by 42%. They were waiting for a sign, a better entry point. And today, on day 6, they got that signal, and boom, they executed step 2, deployment.
And you can see that strategy playing out perfectly right here. Just look at the liquidity building from 60,000 on day 1 all the way up to over 85,000 by day 5. Then today, that sharp drop to 41,000. Now that is not a loss, that's capital being put to work.
And here's the exact figure for you. About $44,000 was moved from just sitting there as idle liquidity into active, yield-generating positions. This is the team putting that whole buy low idea into practice, not buying during the free fall, but at the first real sign of a recovery. Smart.
Okay, so beyond the ratio and the wallet strategy, there are 2 other key metrics that really confirm this healthy turn. Let's take a look under the hood at the trading volume and the total fund value. Get this, trading volume hit $11.6 million in the last 24 hours. That's the highest we've seen in our 6 days of tracking. Now, why does this matter so much? Because volume is literally the engine of the protocol. More volume directly means more fees being generated for all the bondholders.
And look, this isn't just some one-day fluke. We've now seen sustained volume over $10 million for 3 days straight. The standout performer today was the KTA/WF Each pool, which saw its own volume pop by 47%. This is exactly the kind of busy activity you want to see for long-term health.
All right, the next huge piece of news is the total fund value. It has now recovered to just shy of $1.8 million. But more importantly, this puts the fund's total value back above where it was when we started all this on day 1. This chart right here really tells the story of the fund's resilience. You can see that little dip on day 5, and then today's strong comeback. And the result? Over this entire pretty volatile 6-day stretch, the fund is now sitting on a net gain of about $19,000.
So, let's zoom out. Let's put all these pieces together and see what the full 6-day journey really tells us about the health of this protocol.
This little summary table basically tells the whole story, doesn't it? The ratio is almost fully recovered, the fund value is showing a net gain, volume has more than doubled since we started, and the wallet strategy executed perfectly. Accumulate, then deploy. This is a system that's weathering volatility and doing exactly what it was designed to do.
Taking a quick peek at chain distribution, we see continued stability. Base chain is still the dominant force here, holding 89% of the total value locked. We haven't seen any major rebalancing, which really points to a consistent and steady strategy.
Now, the dashboard APR is currently sitting at 30.96%. But here's the really crucial part to remember. In these kinds of market conditions, half of all the fees generated don't even get paid out. They're automatically reinvested, compounded right back into the fund. This strengthens the positions, and it sets up bondholders for even better returns when the market really takes off.
And all of that brings us to our final verdict. Based on that strong ratio recovery, the smart strategic deployment of capital, the sustained high volume, and the fund value swinging back to a net positive, we are officially upgrading the protocol's health status to healthy.
So the bottom line is this. Day 6 shows the system is working exactly as it's supposed to. Patience during the weak moments, followed by strategic deployment at the first signs of strength. That, my friends, is the hallmark of smart treasury management. We'll be back tomorrow to see if this momentum can keep rolling for Day 7.
This content is for educational purposes only and is not financial advice. Cryptocurrency investments, including DeFi protocols and liquidity provision, carry significant risk, including the potential loss of all invested capital. Past performance does not guarantee future results. The metrics and analysis presented reflect a single-day snapshot, and market conditions can change rapidly. Always conduct your own research and consult with qualified financial advisors before making investment decisions. Never invest more than you can afford to lose.